Something really big happened this week, and I don't think anyone's talking about it. And it's really important because it is a major, major, major part of the stock market and the world stock market. And I believe it has just bottomed, and that is going to impact a lot of people's portfolios and their retirements. So I want to talk about that. And one more thing that just happened with Blackstone, one of the largest money management companies on the planet in the US. Stick around, we'll get to it. Hey everyone, this is RC Peck with my weekly update. This is where I look at the news from the past week and I point out or I talk about what I think is most important. Now, everything we do here is about retiring strong. And the reason I say that is because most people are going to spend a third of their life in retirement, right? When you retire, you acquire the choice to not have to work. And in order to stay retired, to keep that choice of not having to work, you really want to make sure your portfolio is strong, is protecting yourself, is not taking 50% hits. So that's what we do here. We look on a weekly basis what's happening to make sure your portfolio keeps you retiring strong. Okay, so let's get into this. I'm going to pop over to a price chart of China. Now this is FXI, and it's an ETF that tracks China large cap stocks. It has been ugly. It hit a new lifetime high at the beginning of last year in 2021. But since then, up until recently, it fell really, really hard. Up until November, it fell about 61%. That's a really big fall. But that's not the story. The story is, I think China's done falling. I think FXI is done falling, or any other type of tracking share for China. And the reason I think this is because there was really, really bad news that came out of China last weekend about the COVID protests. I mean, you have to think about this. It's now 3 years that China has been imprisoning basically the entire country in their house, their condo, their flat, their home. There's probably millions of people on the street because they are not allowed to go back home. It has been absolutely insane what China has done to their own Chinese community. Even so, in the World Cup, the Chinese government is blurring out the crowd so they don't see that basically the whole world has moved on. But let's move on to this price chart. So this is FXI. It's bottomed. It's down 61%. When horrible news came out of China last weekend, the price went up. Right here, if you look at this on the screen, there's two blue vertical lines. That's basically the beginning of this week. And China's up 12%, or FXI is up 12%. So I believe China has bottomed. Now, why this matters. Most people in retirement are told to always have 20 to 40% of their money allocated to international stocks. That is absolutely a huge drag anchor on people's portfolios, whether you're in retirement or not. And most of the time, you actually do not want any exposure to international markets because they will just slow the growth of your money. But what I want to point out here is I believe China has bottomed when bad news can't take a stock down anymore. And believe me, the news has been really bad in China. And bad news makes the price go up, then it's very likely the bottom has been put in. Now, I can show it to you this way too. Now, this is a price of FXI going back to 2004. And on the right of the chart, you can see that 62% fall has been pretty strong. The other thing I want to point out to you is FXI broke out to a new lifetime high at the beginning of 2021, but then got sold off. China has not seen new highs and sustained them since before the global financial crisis. This is not good. China hasn't done anything for 15 years. Now, is it over? Maybe, but we have to see. The point is whether you want to retire strong or just grow your portfolio, which is the same thing. Because if you think about it, most of the reason why people are saving in their 30s or 40s is so the last third of their life is the most amazing it can be. Why this is important is because it may be the first sign that you may want to start thinking about international. The previous 10, 12, 14, 15 years, people who have had their money in international stocks has absolutely unnecessarily slowed the growth of their portfolio. They are not safer. They're not going to retire any better. It's literally they just have less money. So seeing FXI not bottom with that horrible news is really, really interesting, and it should bring your attention. Now, let me quickly do this before I move on to one more thing. This is FXI priced in US stock market units. So before I showed you FXI and it was priced basically in US dollars. But now I'm just using what's called a relative price chart. And you can see, and this is a great example, why you did not want to be exposed to international stocks for the past 15 years. And why when I do portfolio reviews of people's accounts, they are just shocked that they've been in such a horrible position for so long. So this is also a good, kind of picture to say, look, it's probably over, but it may not be over, but it's definitely something you want to start thinking about. And the takeaway is I believe China has bottomed. And I did want to finish this section off by just showing you China priced in US stock market units. And I could also take China and price it in emerging market units. It doesn't look as bad as when I priced it in S&P units, but you can see it's been underperforming emerging markets too. And this is all world ex-US. It's been underperforming international also. It has been a place to absolutely avoid, and that time may have changed. Okay, I want to start something new, and I want you to leave in the comments if you like this or not. If you do like this idea, I will definitely do more of it. I do a lot of research weekly. I spend a lot of time. I love it. I nerd out on this stuff. But there are 3 things I saw this week in my Twitter feed that I wanted to show you. And let's start with this one. So the first one is literally Blackstone has limited how much people can redeem from their $69 billion real estate fund. So a $70 billion, I'm rounding here, that's a really big real estate fund. And Blackstone is a really big company. And they just said to their shareholders, sorry, you can't pull out any more money. A lot of these REITs or real estate funds, they allow you to put money in on a daily basis, but they only allow you to take money out on a monthly or quarterly basis. And basically Blackstone just came out and said, sorry, we are limiting how many people can pull money out. We've already hit our limit. That is not a sign of stability. And Blackstone is not FTX or some small little company. Blackstone is big, and a $70 billion real estate fund is also big. The second of the 3 things I wanted to show you was JP Morgan literally came out yesterday and said, we expect in the first half of 2023 that the stock market will retest its lows of 2022. And that's what JP Morgan just put out here yesterday, saying, we believe there'll be a retest of the lows in 2022. That's definitely not a sign of stability. And then the third thing is I can't help but talk about SBF, Sam Bankman-Fried. I think this is disgusting. I think New York Times interviewing him is disgusting. I think people clapped at the end of it, and that's what you see here. They're clapping at the end of it is disgusting. I think he committed fraud. He actually said, I didn't mean to commit fraud. Well, guess what? You did commit fraud. I want him to spend a lot of time in jail. I think this whole thing is disgusting. I believe the New York Times is kind of whitewashing this person. And part of it may be because he gave $40 to $70 million to the Democratic Party, and it just came out that he gave another $36 million to the Republican Party. So he's given upwards of $100 million collectively to the political parties in this country, and they are absolutely whitewashing this person, and that is not good. And this will all play out live, and it is playing out live. Okay, so let's talk about just wrapping this up. So number 1, to retire strong and to stay retired and enjoy that last third of your life, you have to have an advisor or a manager who knows where to keep you out of, knows what to keep you out of. And most people don't. The second thing is, I believe China has bottomed. When bad news does not take a price chart down or take an index down anymore, it's typically the bottom of it. And that's what we've seen with China this past really week to 2 weeks. And then lastly, let me know what you think about me sharing some of the news that I find throughout the week. You can just leave a comment. It really helps the algorithms of YouTube when you do leave a comment, and I see you all leaving more comments, and that really does help. So I thank you for that. But also let me know, do you like that? I will do more. Maybe I could do just a video on the most important news stories that are coming out each week, because I do the research anyway, and I could share it with you, including just doing a separate video. So please leave that in the comments. I appreciate that. Thank you all. I appreciate you being in my world. If you have curiosity what retiring strong may look like and where you may be giving up unnecessary gains or performance in your portfolio, meaning you're no safer, you're no stronger, you can get on our calendar. You can just go into the description and get on our calendar, and we do a portfolio review and we show you. And the average we find that people are missing or underperforming an average of $35,000 a year per million invested. Thanks everyone for being in my world. I appreciate you, and I'll see you on the next video. Bye.